Hi,
There
it's
we
Anthony
go.
and Mandy.
We're here to give you the top 3 things that you need to know as an investor right now.
Well, good news is number one on the list is low inventory, but low seller appetite, right? So not a lot of people are looking to sell right now compared to normal. I don't know if I would say normal. Let's get us out of the way here. We can take a look at this. So if you look, there's 511 active units on the market, right? There's just not a lot of inventory.
Mhm.
Things were a little bit better a month
Mhm.
ago, right?
Yeah.
Which is actually not too uncommon for February, but also not really what we would have expected.
Right.
New listings came to market. We had 335 new listings come to market. So that was a good sign, but we're really back to those 2019 levels.
Yeah.
We're really somewhere there.
You know, I was showing a buyer some houses this morning just online. I don't show houses, but we were looking to see like what was in their budget. We were looking at what was on the market, and I had to flip from what's listed right now to what's been sold recently to give them like a little bit of hope to be like, okay, well, there's nothing on the market right now, but the listings, this is what has sold in their price range.
Yeah.
And it really, I was like, cool. Hopefully this weekend we'll see some more listings.
Well, you're definitely going to see inventory rise. There's definitely new listings coming to market. Are they going to come as fast as they did in the past? Probably not. Expect something like 2019, maybe even a little bit more than 2019. But if that's the case, active units will skyrocket over the course of the year.
Mm-hmm.
We're going to have a seasonal shift like we always do, but
Yeah.
this is an important thing to realize.
And the only worst year on this chart is 2022.
It's true. So we're not even back to baseline,
Yeah.
right? I mean, if you look at 2019, we kind of started the year where 2019 was, but we went from 500 units to about 1,600 units over the course of that year.
Yeah.
So there will be inventory.
Mm-hmm.
Be patient or start looking at those properties. Well,
yeah, or just be ready.
Be ready.
Yeah, be ready.
Yeah. So let's look at this. The market is competitive. You guys know this, but let's look at the buyer side of the demand data here. We had 335 new listings come to market. We only had 276 go under contract, but honestly, we had 276 homes go under contract. That's still a lot, right? There's still a lot of buyers out there. We only have 1.5 months of inventory on the market. To be in a balanced market, you got to be a 4 to 6 range. 2019, it took us like 6 months to get there, and we have less inventory than that time. Last year, we didn't even get close, and we were in a rising inventory market all year. So we might get to 4 months. I don't know if that's fingers crossed or not, but like as an investor, maybe that's something that you would want to see, right? You'd want to see some inventory, so maybe there's a deal out there. I would just say it really brings us to our third point, right? I mean, if you're an investor right now, there's definitely a reason to purchase, but you have to look for properties that have been sitting on the market because I think people had some unrealistic expectations over the last quarter or so.
Yeah, and these both kind of go together. The fact that it's competitive, with my investors, if they come with a loan and they're not paying cash, then we've got to be a little bit more competitive on the offer. So we've got cash guarantee programs out. I know Fairway has a great one where we guarantee the seller that if we don't close in 10 days, then Fairway will buy the property, and then the seller or the buyer would try to get it from Fairway.
Right.
So we need to be competitive. We need to be creative, and looking for properties that have been sitting on the market is one of the best ways to do it. Another thing is I talked to somebody this morning about a renovation product. Those are amazing programs. And maybe not for investors, but come ready. You can get creative with your down payment, less down payment, more cash to renovate. But for looking for the properties that have been sitting on the market is a big deal.
Yeah. So here is our average days in MLS. We showed 47. Now I was looking at last week's data on a weekly basis, which is something you guys, it's like a sneak peek. Maybe we'll have some at some point.
Yeah.
Yeah. But 47 days in MLS is, a month and a half. The only thing was new listings that come to market last week had 14 days average MLS time. So look at those products that are sitting, because homes are selling that have been sitting on the market, but there's always opportunity there because people are frustrated if it's on the market too long, right?
Yeah.
And that's where you see this listed sale price at 98.5% in all of Boulder County. We're at one of the lower listed sale prices we've seen in a long time. Look at 2019. 2019 was one of those years where we had a lot of rising inventory. We had the ability to negotiate. You're going to see that again this year. We didn't even get to 100% listed sale price. So people weren't paying over asking price. You're not going to see a spring crazy market like you saw in the last 2 years.
Yeah, and it went up 1% from last month. So, we're going to be paying contract price or list price. We're not going to get as many concessions. We called it back in January. I said February and March is when the buy downs are going to go away. I haven't been able to negotiate one in. The only time that I did negotiate one in February was after inspection, and we were trying to keep the deal together. So we negotiated in some closing costs, and we got the people a buy down. But other than that, yep, we're back to high price to list price, close price. So
yeah, for sure. Well, we've had some really exciting news over the weekend, right, Mandy? So tell us what's going on.
Yeah, so if you're living under a rock and you don't know about Silicon Valley Bank, they basically collapsed, and it has to do with the way that I've been summarizing it is the inverted yield curve. We've talked about that in the past.
For sure.
Basically, what it means is the short-term investments were making more money than the long-term investments, and now people are pulling out their cash from SVB Bank. And
but not just people. They built their entire business model on startups and on, lots of big accounts, right? So it's not like your normal bank you would go to where you have checking accounts, banks, and deposits, right? It's big money.
Yeah, it's a lot. And so, the news of that coming out over the weekend and then not seeing, when this has happened a few times, we've always seen an American bank step in and kind of take over. That didn't happen. It was a UK bank that came in and, saved the day for them.
Well, thank God.
Yeah. So, so a lot of shakiness. Anytime there's bad news on the economic front, it can sometimes mean good things for interest rates. So we saw, here's the normal chart going down, 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 bad for rates, down means bad, up means good. And then these past 2 days, where it goes down and then it goes up really sharply. Friday is when we got the news about everything. And then yesterday is when we got, the weekend and all the economic reports about it. And then today we're kind of coming back. So it'll be interesting to see what happens. Today we got an inflation report that had a bunch of shelter costs that, we're arguing that it's not real, and inflation, the next reports coming out in April and especially May 10th are going to be more reflective of what's actually going on in the market. So we're not going to be having all those skewed housing and travel and leisure costs in there. So
absolutely. So the real question here is, do you lock and then shop now?
Yeah, I locked all my loans yesterday, and I would say, Lock and Shop is a great program. If you're working with a lender, make sure that they know about their Lock and Shop program. It gives you 60 to 90 days to be locked, and while they're shopping, so that it can protect your buyer from any volatility. If the rates come down, then we can lock them when the rates come down once they're under contract.
For sure. All right. So let's talk a little bit about interest rates themselves and what this has really meant. So we were at just over 7% last week. And here we are.
We got down to, mid to low sixes again. So that's amazing. But then the sharp, turn for the worse. Right. And, I always tell my clients, sometimes we see economists saying, well, we didn't see that one coming. And, as much as we can make predictions, there's always going to be, and I didn't see that one coming. So you just have to make
I don't know if this wasn't an I didn't see that one coming. I think this, coming from my economics background, this is true recessionary behavior.
Agreed.
Banks don't fail when things are going awesome.
Yeah.
Right? Banks fail, or people do have a run on a bank when things look ugly. They might have had a glimmer of hope there for a minute, and they're like, time to be done.
Yeah.
Right? When you hear about fraud in the news and you hear about other stuff that's happening, like, those are never good things, right? And we're starting to see a lot more of that pile up. So that tells me all of this work that the Fed's been doing is actually doing exactly what it was supposed to be doing.
Right.
We'll see if the economic indicators support that.
Yeah. And, we'll see, but I think we're going to see some more unpredictable news.
I agree.
I think
we'll
that
see a lot
we're
more
going
of
to
it.
see a lot of things. So, as an investor, keep your eye on the prize. 63 years of recorded Colorado, history of real estate.
Yeah.
We know that there's about a 4.5% to 5% rate of return on your long-term investment. In the past couple of years, we've seen 16%. That's crazy. That's where we're seeing the short-term gains being bigger than the long-term gains. So moral of the story is Colorado real estate still a great investment. And if anything, I heard somebody make
It's the most stable time to buy real estate,
right?
Put your money where it's not going anywhere.
Yep. I heard somebody, if they're like, if you have $500,000, do you want to put it in a bank or you want to put it in a house? And I was like,
heck yeah, stable assets are where everyone, especially all the millionaires and billionaires, right?
Valid.
Most millionaires have made their money in real estate, right?
Right.
And new investors probably all know that. If you're a first-time investor, it is not too late, and this is an awesome time.
Yeah, it's hard, but it's worth the work. It's worth the wait. Reach out. Anthony knows a ton about real estate investing, not just title stuff. Reach out.
It is one of my passions.
Yeah, reach out. You can pick his brain. Reach out to me. I can go over financing options, and we will be here to help.
Awesome. Well, thank you so much for coming today. We appreciate you joining us, and we'll catch you next time. I guess we probably do something fun next week that's not tied
we'll do
to
some kind of fun presentation.
Yeah, we always seem to catch a fun one at the end of the month. So we'll catch you then. And if nothing else, we'll see you next month.
Yep.
Bye.
Bye.